Hello, my money movers. What have you guys been up to this week? Were you looking at the Dow? Were you looking at the NASDAQ? Were you watching? Or were you watching maybe too obsessively? Just seeing it drop and drop and drop. But guess what? Don't panic. So you might have guessed it. Today, I'm doing a whole video dedicated to the importance of not panic selling. But before we get into that, please don't forget to like, subscribe, and turn on that notification bell. Now let me tell you why you shouldn't panic sell. If you've been watching the market this week, you probably saw that the market was looking pretty bad, especially certain days of this week. I know, it was looking real low. Lots of people started to panic sell. But if my money movers have been keeping up with my content, we didn't do this. We know not to panic sell. I say it in probably every video where I talk about the stock market. I really try to emphasize that and re-emphasize that because I know how stressful it can be to look at these numbers and think, oh no, I'm going to lose all my money. But when you sell, when you panic sell, you're locking in that loss. And that's exactly what you don't want to do. Now, just to paraphrase for a second, Warren Buffett once said, when others are greedy, I am fearful, and when others are fearful, I am greedy. Now, that being said, this dip in the market was a great opportunity to buy on the dip. That's what I did. I mean, I even purchased some SOS Limited when I saw this. Now, don't get me wrong. It's not like I just have all this knowledge and confidence. So when I see the market's not looking good, I'm like, I don't care at all. No, of course I'm going to have an emotional reaction. But the important thing to do is to listen to your mind and not let your emotions drive you into panic selling. If you know you have a good stock that you're invested in and you know that company is going to go back up, please do not sell it. You don't want to lose that money. It can be scary to think that you're losing your money, I know, but please just wait and see. Because yeah, the market does go down, but guess what? It can come right back up just like that. I like to look at this big pull down in the market as a buying opportunity. Think of it as a sale. Now is your time to go shopping. Yeah, there are certain instances where, it's the beginning of a bear market and a company's not doing well. But if the economy's looking good and nothing has gone wrong in that company, do not sell purely based off of emotion. It can be hard to make these head versus heart decisions, really, in any aspect of life. You probably hear that more when it comes to relationships where, there's that person you like, but logically, they aren't good for you. And in the end, you realize, oh, maybe I shouldn't have gone back. But you did because guess what? You made an emotional decision. Sound familiar? Well, I'm not sure if I can help you there, but I can help when it comes to applying this to investing. It's really important to not let your emotions run you. This is your money. So, there are important things at stake here. Why would you lock in your losses when you could have even more gains than you predicted the first time around? Come on, guys. We're smart over here. You know what to do. I know it's really hard to look at the market when there's these bad days. No one likes the dark days, the rainy days. I just want to help prepare you for it as best as I can. What I mean by that is there are a few things you can do to be prepared for it. Like you can make sure your account is funded. Sometimes it takes a few business days for your money to transfer from your bank account into your brokerage account. I've actually run into this problem where I've had things that I wanted to buy, but I took too long to move money from my bank to my brokerage account. And so I saw some things that were low and I was like, oh, great, let me buy on the dip. But I didn't have enough money in my brokerage account. Remember, I'm just starting off. I'm still learning. So learn from my mistake. Keep money in that brokerage account. That being said, again, keep money in your brokerage account. You're going to want to have that buying power when a good buying opportunity comes your way. It'd be a great time to buy on the dip or use the dollar cost averaging method. Now I really love to shop, so I'm going to use that shopping analogy again. Think of it as you're going shopping and you want to have some money set aside for that big sale that's coming up. Except with stocks, you don't know when that sale is going to be, so you always want to be prepared. And then while everyone else is panicking, you're over here, you're happy, you're shopping because you know that the company will rise again. And now you'll have even higher gains than you initially predicted. I mean, think about it, guys. Like, you think you're only going to get, I don't know, like, let's say you invested and bought 3 shares and you think, okay, maybe if it doubles, I'll make this amount of money. But if there's a dip, now you have a chance to buy even more. And then in the end, you'll have even more gains, which is even more money. Come on, we're making money moves over here. That's what we're all about. You have to be mentally prepared by knowing there will be bad days. A good way to do that is to know the risks and just keep in mind some days will be bad. But you know what? Now we know how to navigate it. Educating yourself is one of the best ways to emotionally and psychologically prepare yourself because it's not easy. But you're here, you're watching my videos, and I think that's a great place to start. Now, with all that being said, I just want to remind you guys of one more thing. I know it's tough looking at the market go down, looking at all the red, but after I did some more research, I discovered that the market will recover 100% of the time. And if you sell out when you see it going down, that's locking in your losses before the market gets the chance to come back. It will always, 100% of the time, recover. You guys can look at the history, look at the past, and look at how the stock market has worked. You know, I don't want you guys to worry because yes, it can be tough. You know, it's like you're having a bad day, you're going through something. You might feel like you're in it alone. You just see things not going well, things are falling off, a lot of negative, a lot of red, a lot of bad. But just because you're in a bad situation in one day, one moment, one week, does not mean that you can't come back. And I want you to keep that in mind in life and with the stock market. I know it's a crazy analogy I'm giving you, life advice mixed in with the stock market, but it really is emotional, psychological, and I'm a huge advocate for mental health. So it's so important, you know, you guys, you have to remember, just because you have something bad happens doesn't mean it won't get better. The market recovers 100% of the time. Thanks again for tuning in. Please don't forget to like, subscribe, and turn on that notification bell. Thank you guys. Have a good one.